Yeah, I think I would say I'm somewhere in between, but I think it's certainly encouraging to see the reaction to earnings this quarter because last quarter was also a great quarter, but the market just didn't care and focused solely on the negatives. And that's what we, went through for most of the second quarter until sentiment did start to change a little bit. And I think it's because it just got way too negative. But I think if we look at the positives, it's clear that the consumer is still healthy, job market's still healthy, retail sales are hanging in there. So I want to think that the market is coming to terms with this new reality that the economy is going to slow. It's by design. It needs to in order to combat inflation and soften demand. That's the big problem here. But I think to the extent that we can see that earnings aren't a complete disaster, and I think that we still need to see a lot, of what happens next week. Next week's a very important week that we need to see, especially from the large tech companies, that where we've heard that they've cut back on hiring trends and other things. We need to understand why, what it is that they're seeing in their businesses that's causing them to make those changes. But I think if revenue holds in there and that earnings can still grow, and I think that's a very important part of this because we have a lot of strategists that are calling to little to no earnings growth this year. And if that doesn't transpire, I think that's certainly a positive.
I love the point, Jason, that Brenda makes here. It's really difficult to make big, broad market calls ahead of the big, broad market earnings next week. These names that have, in large part, gotten us here in the first place. The Nasdaq's up 13% from the June low. Apple's up 19% since mid-June. Amazon's up 21.5% since late May, as Alphabet is up 11%. But these stocks, Nvidia's up 27.5% since early July. Meta's up 18.5% since late June. These things have gotten us in large respects to where we are. Can you really make a call on either side of this debate until you hear from those companies?
No.
I think that's I would agree with Josh. I think that's a really tough call to make here. I was saying this earlier. I was thinking about this earlier before the show. Just, the macro backdrop has been difficult. It's been really foggy. Last week we got some tough inflationary numbers. We got retail sales at the end of the week, and the market was rallying off of that. Again, it was a slight beat, but it was nominal. If you look at it from a real rate perspective, it's not the best. We come into today and this week, housing numbers not really great. Philly Fed not awesome either. So it's tough to kind of look at that and say, okay, we're screaming to the upside. And as you mentioned, I mean, Nasdaq is up close to 8% this month. And a lot of the growth names have really run. So I think for me, I'm still leaning defensive, still looking at this market and really evaluating kind of the macro and the read-through on the consumer. How is the consumer still faring? Again, as Brenda mentioned, the earnings haven't been terrible. They've been okay. But again, if we're looking at it and going into kind of the pulse and the personality of this market, I mean, we're very pessimistic, and we've been focusing on the E. So I think I'm really concerned about guidance. What's the guide through? How has FX played into a lot of the mega cap tech names? Obviously, the employment situation, we still have a very tight labor market, but maybe it's just being prudent and just understanding the macro, the environment, and really understanding, hey, we don't need to make any serious moves here as we move forward. Let's kind of see how the market still continues to play out in the macro backdrop as well. So I'm a little bit in between both sides.